Welcome back. Welcome back. I thought it was time that I make another update video. It's been a while, and I appreciate you tuning in to this update. But yeah, a lot of things have changed, and thought I'd provide that information, hopefully some knowledge out there to help anybody who might still be struggling, or to help teach any newcomers or new learners. So since my last video, which very much is still applicable, the way that I look at the market and the way that I trade in that video is good. And it has brought me, I don't want to say a lot of success, because I'm not, the biggest trader out there, the most successful, YouTube star, none of that stuff. But it has brought me a lot of success. It has been a very good model. It's really, really good when the day is going to be a significant reversal kind of day. So what I want to talk about now is really what I've been doing for the last month or so. And I've got a lot of data that I can show. I'm going to try to make this as quickly as video as quick as possible, but so I won't show you all the data that I have on it, but it's good. So far, it's my favorite. So far, it is the most consistent for me. And everybody's going to have their own model that works for them, that clicks in their brain, that they understand. So this might not be yours, but maybe my last video was. Maybe a different strategy out there entirely is going to be your model. But this one has worked really well for me. And it's simply, as you can see on the screen here, it's the model that ICT has taught Cameron, his son. You can see it's in quotes, the 30-second model. I call it Cam style. It's just the model that supposedly Cam is using. And we've seen a couple examples, but mostly just equity progress on the top step accounts. And I no longer follow ICT on Twitter, so I don't know of any recent progress for most of the month of October so far. So what I can show is mine. So I liked this model because it's quick. You're in and out within minutes usually. It happens a lot in the day, so you can get, multiple trades going, or if you mess up, you can recover that within the day. So it's quick and fast, easy, and easy to understand. So what we see that was written here doesn't give you everything, but over the course of time, I've developed the way that I like to use this model. So what you're looking for is a buy stop raid. If we're going to go short, you're looking for a buy stop raid. So it comes up, takes buy stops, then comes down, and then comes, retraces into a fair value gap where you enter, and you go short from there. To precede that, you would find your draw on liquidity on a higher time frame, in this case, sell side, and use that to frame the trade. It doesn't have to go to the draw. It's awesome if it does, and I've been tracking, for the most part, if it does, and if it does before hitting my stop loss, or if my stop loss is hit first before the draw is hit, so that I can start to learn how frequently that happens. And then as consistency builds, you can start holding those trades. Instead of just 12 handles, you can go all the way to your draw, because that'll happen, 8 times out of 10. So you can take a partial at your 12 or 15 handles and then hold a runner to your draw, because I've been tracking whether that happens or not, or how often that happens or not. So that's kind of the basics of that. He also put on Twitter a chart example, which is okay. It gets the point across. Price, this is the 5-minute chart. This is the 1-minute chart. So price does come up. It makes sell side off of a box here. I'm assuming is some kind of fair value gap. I think he uses orange for fair value gaps, but who's to say? Because it's not on the chart here. But price comes up from that, so it makes sell side, dances around a little bit, and then raids those buy stops. You can see it marked buy side liquidity here. It raids that. The very next thing that happens, I shouldn't say it like that. What you wait for is after a buy stop raid, you wait for a down close candle. Doesn't have to be the next one, but it's awesome if it is. That means it, all the more wants to turn around, but it doesn't have to be the next one. You see it raids buy stops here. 1, 2, 3 candles later is when it finally forms that down close. But nonetheless, you wait for a down close on the 5-minute. Once it closes, wait the whole 5 minutes. Wait for that candle to close. It can go kind of far. It can be kind of short too. You just wait for it to close. And then you jump to the 1 minute and enter on the next fair value gap tap. In this case, there's a nice one right here. This 5-minute candle does come down and retrace a bit, so I'm going to assume it retraces up into this fair value gap at some point. So your entry, you're going to be seeing that it came into this fair value gap probably as you come down to the 1 minute. So somewhere in some of these candles is when it actually would tap your entry, because you have to wait for that 5-minute candle to close. And then your stop loss is 12 handles, which happens to put you up here. And your take profit, according to the original explanation of this, is 10 handles. So it is a negative R. Whatever you think about our ratios is crap, to put it simply. It doesn't matter. You're in and out so quick, and the win rate on this, compensates for that. What I did is a couple weeks of that negative R 10 handle profit, and then I've moved to a 1R. So now I'm taking 12 handles. Eventually I'll move to 15, but I really don't see the need to go much more than that. As I continue on, I'll just increase the position size and continue to take quick ninja-like scalps, right? So once you're in it, this happens to have his sell side is down here, right? On the 5-minute chart. I'll show you how I use a higher time frame to pick my draw in a minute, but it goes all the way down. It's 40 handles. Don't take the full thing. When you're learning this and practicing this, take 10 handles, take 12 handles. It would have been, I don't know, somewhere probably around this sell side wick, and you're done. You're in and out, taps and goes. Sorry, this is not the 1 minute. This is the 30-second. It's called the 30-second model. So ideally, you're using like the 5-minute and the 30-second for entry. I don't have the 30 seconds, so I use the 1 minute. I apologize for confusion there. So he uses the 30-second chart for entry, and you take the next fair value gap tap. So anyways, hopefully with that out of the way, I've just made some bullet points to hopefully make that a little clearer. You use the 1 hour or the 15-minute, which is on my left here. I like the 1 hour. You can use whatever, 1 hour or 15-minute. I like the 1 hour. I haven't even touched the 15-minute. So that's where you find your likely draw. It can be a swing point or a fair value gap. Remember, price is seeking liquidity or to fill imbalances. So those are the two strongest draws you're going to have. It's going to seek out a swing point to swipe that liquidity, or it's going to seek to fill an imbalance. That's all price is going to do. So both of those are excellent. In this case, 1 hour chart, likely draw. You can see I've written draw here. Let me zoom this in a little bit. My draw was down here. Why? Because we've been insanely bearish pretty much all week, but it's been really, really, really choppy this particular week. I think we left and came back to the weekly open every single day except for today, which is Friday. Thursday it came, tapped that weekly open, and then has melted ever since. So very bearish. I knew we were going to continue bearish. So my draw was down here. So I waited for a buy stop raid. This is the 5-minute chart. So I use 1 hour, 5 minutes. So on the 5-minute chart, run of 5-minute swing highs and reject. Must have a candle close opposite, so a down close candle, after it takes that swing high. So we've had a swing high here and a swing high here, pretty equal. As the morning went on, it rated those swing highs, and it couldn't get above the London high over here. So I think it actually might have, nope, it didn't even tap that fair value gap. So it rated those highs, didn't want to go any higher. Here's my down close candle. This is again the 5-minute chart. You wait until this entire candle has closed. Came down kind of far. It even made a fair value gap with the displacement that it was. And then as soon as that closes, 1 minute, you enter on the first fair value gap. Target 10 or 15 handles. Oh, this, yeah, we can talk about this. You can take each fair value gap all the way up to the draw. That has been an idea I've been playing with, and for the most part, it works. Sometimes it doesn't, because it doesn't always make it to the draw. Sometimes it does. So you can see here that it did come down, but it went all the way back up to here to take more liquidity, and then came down to hit the draw. So that's where I track, does it hit my draw before my stop losses hit or not? In this case, it did not, but you're in and out so fast that it usually doesn't matter. So I'm going to get rid of this, and so now we're going to drop down to the 1 minute. So as you're watching this, it raids, comes up here and starts to do some bearish movement. What you're likely not going to be used to is sometimes it comes down pretty far. I knew it was going to go down as soon as it rated these highs, and I had to watch it go all the way down. What is this, like 870, 50 handles, give or take. I had to watch this thing move without providing an entry. I have a little, I don't need it, but I have a little cheater that shows me fair value gaps. There you go. All the little yellow boxes. So it came down, made a fair value gap, but never tapped it. Made a fair value gap, never tapped it. And made a little fair value gap here. It's like 2 ticks, if it's tiny. And it tapped it. So you enter, and away you go, and you get your 12, and you're done. I had 0 drawdown, 0, absolutely nothing. And then I got my 12 handles right there. So that's essentially what it is. You find likely draws. I mean, up here is a draw too. These are pretty equal highs. So there's a draw here and there's a draw here. But you have to understand market structure on a higher time frame. You have to know how to find your bias. And I know everybody, that's a buzzword. Everybody hates that you have to find a bias and all of this. A bias is just an idea of where price is going to go. There's not a right or wrong answer necessarily. It's it's your idea of where price is going to go is your bias. So look at what's happening on the higher time frame. In my opinion, all the way from Monday, look at, it's just going down. Why would your bias be bullish at this point? It hasn't shown you anything otherwise. Even here where it shoots way up, don't need to turn bullish. Down here where it shoots way up, don't need to turn bullish. You notice I have sell side down here. I have a fair value gap down here. This is where price is going to go by the end of the day. At least that's where I think. It's at least going to take this sell side liquidity because this is equal lows from over here. So bias is bearish, bearish, bearish. So I'm like, all right, what lows can we take this morning? And here's my draw. Long story short. So When I sit down at the chart, I sat down at 7 o'clock Eastern. No. Yeah. No. I sat down right here. 7:45 Eastern, 6:45 Central Time. I sat down, pulled up the charts, boop, rated a couple equal highs. I'm like, huh. As soon as I sat down, it started playing out. You'll notice if I go show some examples, which I will in a second here, I love trading NQ. By the way, this is only, to my knowledge, for NQ. ICT says everything he teaches can be used on anything. I'm not going to vouch for that. I've only tested it on NQ. But anyways, I sat down, rated highs, like right there. And it's before market open. This is 8 o'clock and market opens at 9:30. So I take a lot of early morning trades. I'm in and out and done for the day before the market even opens. I can go back to sleep or like enjoy the rest of my day. It's really, really awesome. So that happened. It rated. I sat here sipping on my coffee, watching it trickle down. Not upset. Not worried I'm going to miss anything. It's going to play out. Once you see how much this happens and how easy price adheres to this, you're not even going to be worried about it. I have no FOMO at all. Like I'm going to miss it. This isn't going to play out. Who cares? An hour from now, you're going to have another one or three. I mean, it happens all day long. So like, it really doesn't matter. What was nice about this one is it moved below this low, which is a market structure shift. So it kind of added the confidence for me in this particular setup that taking a short all the way down here would be fine, but my draw is still way down here. I don't even think we were halfway there yet. So don't be afraid. It doesn't always work out. It might have wanted to come up and tap this one and wick through, do some damage, but you know where price is going to go. How bearish have we been all week? Your draw is down here. Just re-enter. Comes up and takes your stop loss. Well, technically it tapped this fair value gap on the way up. So re-enter up here off of that idea instead of this idea, this fair value gap. Enter off that one. Just put in another one, another short. Not financial advice, but you get what I'm saying. So that's the model I've been trading. And it's worked out really, really well for me. I have a spreadsheet over here. Drag it over. Okay, so cam style. So I've been testing this since September 19th. Up here, like all these trades are not specified, but some are paper and some are live because at the time I didn't have the ability to trade before market open or quote unquote after hours. I had to wait until 9 Eastern time for my broker to allow me to trade. So after that line, I have been using a new broker that allows me to take those really early trades. And after that line, I started going for I'll explain that in a second. Up here, I was going for one trade a day for the most part. Down here, I was going for about 2. And so my win rate came down some as I would take some losses. But I don't think I had a red day at all through here. So I'll show you some of that. But so you can see right now, starting from a month ago, I've had 34 wins and 13 losses. I'm 72% accurate. Most of them are 10 to 12 handles. There's a couple that went further. I think this one was, nope, not that one. This one. I think it was this one. One of these I traded PPI which was a bad idea. Don't trade news, but it turned out okay for me. So some of the examples I want to show you of some of my past trades. Let's pull that one up. So this one, I only have two charts here, a 15-minute and a 1 minute. You can obviously see we're bearish. So my draw was this line down here. Bad screenshot because I don't have the reference of what it was. Most of the time, it's some kind of low, an old low or an old high. But anyways, price did this. It was coming down. It rated that high and then rated that high and hit a fair value gap. So it started coming down. And it made a fair value gap here, hasn't tapped it, made a fair value gap, which I didn't mark out, right here. And so that's where my entry is. It tapped it. It actually came back up to that one and then took off. Boom, done. Hit it to the tick, but even if it didn't tag you out, it comes back anyway and does that. So that is that one. I mean, these are all going to pretty much look the same. At the beginning, some of them, as I was learning this, some of the aesthetic of the trades are not as consistent as they are now. There was one where I entered on what I thought would be a 30-second fair value gap. I was just kind of assuming because I don't have the 30-second chart. So I was playing around with some ideas a little bit in the beginning to learn it. But anyways, so I've got my 1 hour chart up here, 5 minute in the middle, 1 minute on the side, on the right side. So we're clearly bearish, right? My draw is this low down here. And looks like we're coming down. Price pops up and raids a high by this white line. It actually does hit a fair value gap in this case as well and starts moving away. As it moves away, we've got that down close candle. Even this one was a down close candle, the very next one, which is somewhere in here. But you can see there's no fair value gap created. It comes up and makes a new high. See that wick makes a new high by a couple ticks, which is right here. And then we have a down close candle. So you got to wait until that candle closes all the way down here, which is somewhere all the way around here. Then the next candle opens. You go to the 1 minute. It immediately made a fair value gap. Enter short. Boom, bam, done. I'm out. What is this? 9 a.m. Market's not even open yet. Next example. All right. So this one shows some bearish movement on the 1 hour. This day does get a little bit bullish, but on the 1 hour, we came up and rated a bunch of highs and hit a 1 hour fair value gap. 1 hour fair value gaps are quite strong. I trust them a lot. So I had every confidence this was going to come down, and it did. So moving to the 5 minute, this raid of the highs also happened on the 5 minute, which isn't always the case like the previous examples. So it did in this case. So that what you're looking for is a 5 minute raid, not a 1 hour raid. But that did add confidence that that raid was the same raid for both time frames. Okay, so after it raided, it did make a down close candle. Now, you'll notice here, and I wish I could mark it up to show you that you don't lose, but it makes the raid and then a down close candle, which is somewhere in here. There is a fair value gap and a tap, but that down close candle wasn't closed. It opened and did some of this and made this bullish candle. So because that down close candle on the 5-minute, wasn't closed yet, I didn't enter on this fair value gap. Now you could have and not lost in this specific example because your entry is somewhere above 84, we'll call it 85. So you would have been up to 95, 96, 97. Your stop loss would have been way up here and you would have been fine. But this is why we wait, because sometimes it'll come back. If it doesn't, if you don't wait for that 5-minute candle to close to add that confidence, this can happen. And I'd be a little nervous. So just wait. And I did. Then it started trading lower. And if you follow these fair value gaps, you'll see I took the first one that I tapped with this little wick right here. Almost zero drawdown on almost all of these trades. Some of them get ugly. Some of them are really good. I've had them come all the way up to one tick before stop loss and then trade away. I've had them come in to draw down by only one tick. So every trade's a different flavor, but this happens a lot. Tap and go. Taps the first one, it never tapped that one, never tapped that one, or that one. You just wait. It's all the way down here. My draw is still way down here. And I mean, that's it. So I got two more to show you. And then, I mean, that's really it. I've even got executions listed. But on the 1 hour, let's see, is for draw. So I'm bearish for some reason. It looks pretty bullish. I want to say it started reacting from this 1 hour fair value gap, or maybe there's an order block in here. I'm not great with order blocks, but nonetheless, when I sat down, I was feeling bearish. I marked out the next low. Here's my draw. You got draw here. You got lows here. You got lows here. Fair value gaps here. There's tons of reasons for price to go down there. I think actually here I see it. I was bearish because we had swiped the previous New York PM session highs and started trading away. And that's why I decided I was bearish. This 1 hour fair value gap is nice though too. So anyways, this is really zoomed in and hard to see, but there's a 5-minute high rated through. I think that's even a 5-minute high rated through. We've got a down close candle right here. So your entry should have been up here. Came all the way down, came all the way back, and it entered here, way up here. You have been in and out real quick and easy. I didn't like that. Do I think I know what I'm doing? Sometimes, yes. But I didn't like that, so I waited for the next one. And I even entered early, I think. Oh, no, there was a tiny little one tick fair value gap between that down close candle and this up close candle. And I took it, and it came in here and did its thing, and boom, bam, done. I was out for the day, and this is pre-8:30 Eastern time, so market wasn't even open yet. But you can see that even if it looks ugly, a lot of times it can pan out just fine if you follow the steps. So we'll go to that last example here. Okay. 1 hour chart. Moving bearish. So I marked out a low. It wasn't equal lows at the time. That's the very end of my trade. So that low wasn't there, but marked out that low as the draw. What I liked was it couldn't take that low here. Didn't have enough juice, right? So it failed to displace below that low, came back up, and as you can see, this was a news event actually too. So this is the backside of a news event, but didn't have enough juice, came all the way back up, swiped those equal highs that it ended up creating by just a few minutes. That high was created, and then just a few minutes later, it swiped it. But swiped those highs, came all the way up here. I had to wait for this giant down close candle to close. It did. Looks like 5 minutes, made another candle, and then partially through that next 5 minute candle, it made a fair value gap. It's the first one tapped, and it's way down here. My draw is literally right there. So it's like, and it hit it to the tick and then reversed. And I don't remember if it came back down and grabbed it or not, but it doesn't matter. My target was before my draw, so I took it. That's kind of the name of the game. Just first fair value gap, just take it. And it worked out. So again, this is 9 o'clock, isn't even hit yet. This is pre-market. And it seems to just happen like clockwork. So this is my spreadsheet. You can see while I was doing about one a day, I was at a damn near 100%. This was almost right after it was a kind of announced, I guess. I wonder if it's, oh, there's no date on here. But it was almost right away. I was like, ooh, I like that. And I started studying right away. So I was kind of maybe a week after Cameron started using it. Maybe it was a week after it was kind of announced. So I was a little bit behind him, but he was doing pretty well. And I'm doing pretty well. And then I started using ICT scaling plan for NQ, where he looks for 120 points a week, starting with 1 micro. And as time goes on, scales up in position size while still shooting for the same goal every week. 120 points a week is 2 12-point wins every day. So when I started with the broker, as I changed in October to a new broker, I started going for 2 wins a month, and my win rate dropped a little bit. The more trades you take, the more you are opening yourself up to risk. But some of these days, like here's the third, some of these days got pretty wild. Do the math. I came out in the green that day, but it was, I was tired. I went from 8 a.m. all the way to 1:30, scalping all over the place. Okay. I even threw in an extra contract here and broke the rules, but I don't have an excuse for it. Don't break the rules. So if your equity can handle it, and here's a good indication if it can. Where are you on your equity on this chart? Right? Are you under $10,000? Are you under $20,000 in your equity in your account? You shouldn't be using minis. How about that? You can scroll all the way through here. As soon as it hits 10 micros, I switch to minis because the fees are substantially less. Like over the course of these 52 weeks, the fees all add up to $500 or $5,000, if I remember right. Using micros the whole time was like $17,000 in fees, because you're using so many contracts, and it's like, I don't know, $1 or something for each contract for each side, entry and exit. So I switched. So this is supposed to be like 10 micros, 11 micros, 12, 13, 14, 15, 16, and then it gets to 20 micros. And I just went 1 mini the whole way, and then 2 minis the whole way. You end up at about the same spot at the end, and you spend thousands of dollars and less in fees. But anyway, I decided to follow this. So now I'm shooting for 120 points a week. My first week doing it, I hit 100 points, and I was ecstatic. There's a number of losses in here too. So, it is what it is. It's always 12. You don't move your stop loss. You don't go break even. You don't do any of that. You just enter and go and just let it be. Got 100 points for the week. Math that out to whatever position size you want. What are you doing right now for position size? Imagine getting 100 points a week with that position size. It could be nuts. It could be literal nuts. I just base this off of minis instead of micros. Using one mini for all of these trades. This, instead of 200, would be 2,000. For a lot of you, $2,000 a week would be pretty sweet. This week was terrible, and I don't remember why. Very heavy news week. Very, very heavy news week. I didn't take a loss per se. I was at zero. I was break even for the week. So this week, I haven't done my screenshots yet, but I'm at 50% of my goal. I got 57 points. So even, like I said, even if you were to think about that in a scaled up process or scaled up kind of mindset, that's over $1,000 this week. So in the month of October, and it's not even over yet, I've made $3,000 taking a couple quick scalps. It's really easy. I've had only 2 losses this week. You don't need any more than this. You don't. Once you learn how to see the 1 hour chart and what's happening, finding the rest of this is, I don't barely even look at the 1 minute chart, and it does work on the 1 minute chart. It doesn't have to be the 30-second. Sometimes it'd be helpful because you might have got an entry up here. But you don't need it. I don't even really look over here. I'm watching the 5 minute and I'm watching the hour, and I get to see the overall picture of what's happening. And then I pop in to this 1 minute, slice a little chunk out, and I walk away. Very little mental capital, very little actual capital being lost here or even risked. The percentage that scaling plan factors in is an adequate percentage for risk. It does not, doing this way with these micros, I have zero cares. If it goes up and takes my stop, I was wrong, and I'll find the next one. Big whoop. It didn't, it saved me from it going all the way up here. It really helps train you to trust that you have a stop loss. Not that hitting the stop loss is bad or wrong or a loss. It saved you from an idea that wasn't right, and that's okay. Wait for the next idea. There you go. So that's what I've been doing. It's been really, like you saw from the spreadsheet, it's been really working for me. I've got all kinds of different, pieces of knowledge about it and how I see, what is happening in the market and how I form my biases. Go watch. Oh, I was going to suggest, go watch some videos to get that foundation. Some of my suggestions I have written down is watch the 2022 YouTube mentorship model on ICT's channel. If you don't watch that all the way through at least once and take notes, you shouldn't even be watching mine. You shouldn't be watching this video at all. You shouldn't even be trying to trade with ICT concepts until you watch that mentorship. I've watched it 4 times through, and I've added to my notes every single time. The more you watch it, the more you'll pick up, the more you'll, as you're paper trading and forward testing and back testing, things will start to make sense in your head. So the next time you watch it, other dots connect. Go watch it. The second I watched core content months 1 through 8 or something, but if I remember right, it's either months 1 through 4 or 1 through 5 that have better information. In my opinion, he starts getting into more of swing trading and interest rates and different things like that you don't need for this strategy. I've never needed it for anything that I've done with ICT stuff, but I watch all of core content if you can, but at least the first several months, 1 through 4, 1 through 5, watch those, and then find any ICT videos about power of 3. Weekly power of 3, I use all over the place. All over the place. I don't think I have. Yeah, weekly open is here. So what I do is like on Monday, I kind of just wait to see what Monday does to develop a weekly bias, which helps me kind of narrow down what I want to do with my scalps. So typically on a bearish week, Monday or Tuesday, you're going to get a little bullish action as it makes the high of the week. It's always going to come up a little bit, and then it's going to distribute down, and that's your week's kind of bias, bearish. It's going to come all the way down, and then it'll retrace a little bit at the end, like what it's doing here. I mean, this is the 1 minute chart, but it'll retrace a little bit at the end. Almost every candle looks like that. You got a wick on top and a wick on bottom. So go watch weekly Power of Threes or Power of Three in general. I don't think ICT has a ton on Power of Three. Some other channels out there have talked about it in plenty. So I don't have any specific recommendations outside of ICT stuff. A lot of people out there talk about ICT concepts incorrectly. So just be careful with what you watch. If you have any questions, comment on the video and I can try to help you tell you if this is a good source, but that's really all I got. Hopefully this made sense to you guys. If you have any questions, again, feel free to comment below and I'll try to answer them as best as I can. Anyways, I know this is probably a lot longer than I expected, but thanks for tuning in. And on my way, I'll pull up that spreadsheet again. Still quite at the beginning. I think I just hit 37. So I am almost to 4,000 where I will go to 2 micro contracts. I mean, it's insane. Just look at how quickly this adds up. You only start with $240 a week, which for a lot of people is nothing to really even bat an eye at, right? That's nothing. Absolutely pennies. It doesn't feel good. I mean, it feels good, but like $240 doesn't go very far, at least in the States. In the United States, $240 is less than a lot of people's utility bills to heat their home. But as you get further along, you're throwing thousands of dollars a week. I mean, it's just, I can't even imagine making $12,000 a week. And you don't have to continue pushing this hard either. 120 points per week is a lot. But by now, you're going to be able to take longer than 12 handle runs. You're going to maybe calm it down and hit 50% of that, take 60 points a week. That's still $6,000 for the week. Pretty insane. So it's a really great scaling plan. If you want a copy of this, comment below. I'm sure I can find a way to get a public distribution of this. I just typed it all in from an image on ICT's Twitter because I don't think he publicly shared a spreadsheet, so I made it. And if you see up here, it's all got formulas and stuff to calculate everything for you. And then you just type in your current balance here and it crosses off where you are and how far you are. So let me know. Again, thanks for checking this out. Hopefully it helps. And I'm always available to answer questions. So just let me know. All right. Thanks, guys.